Good morning, traders. Welcome to Tuesday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump in, we always need to make sure that we know what news is going on and when it's going on and all of that fun stuff so that there aren't any surprises. And like we talked about in some of the other recaps and briefings, there's really not any news. Today is really kind of the first day that we've got any large news, and that's the EIA short-term energy outlook at 7 o'clock. So, I mean, realistically, from a news standpoint, that's going to affect things like, the NASDAQ and some of the other markets that we watch. We do have medium news announcements at 8:30 with the non-farm productivity and unit labor costs, but that's really about it. It's just a bunch of small and mediums. Later this afternoon, of course, today is Tuesday, so if you're a crude oil trader, API weekly crude oil stock is definitely useful and interesting. The previous was 4.146 million. And as far as the unit labor costs go, that was negative 8.9%, and then non-farm productivity came in at 4.9%. Respectively. So with that out of the way, now we can start jumping into some charts for today, 12/8 of 2020. First up on the list, we've got the NASDAQ, which is, to be fair, still going fairly sideways. Yesterday did accomplish, in the end, quite a bit. We started off with that gap to the upside. The market filled the gap, and just like the NASDAQ typically does lately, it filled the gap and then some, and then just V-bottomed out. It's a huge reversal back to the upside, all the way back up where the market's kind of chopping around now. It appears as though we're dealing with a bit of a wedge that the market's trying to break out of, but we just washed out to the really big point of interest where it comes back together. It's kind of the breakout pullback. Considering that we're in the middle of the range and the major buy support doesn't start coming in until 12,525.75, and resistance isn't up until 12,606.75, we're just kind of left hovering around these 12,600s and bouncing off of support underneath going inside this range. Realistically, if we look at the bigger picture and we zoom out as far as what's going on, I would rather be a bull. I think that's fair. But being a bull way up here is tough, right? Looking at the bigger scenario, being a buyer way up here when the trend's been going on this long, that leads you to think, maybe I'm taking on a little bit too much risk. So a lot of buyers are going to be waiting for those deeper pullbacks to previous structure, because then it's easy to quantify. They can buy in, their stops can go below the lows, or they can buy in at the lows and their stops can go underneath the major lows. Whatever the case may be, it's a lot easier to get the risk reward and more traders interested if we can dip. If the market does want to lift back up again, we've got that resistance at the highs. Then we're dealing with all-time highs, 12,600s, which has been a mess. If it starts going through the top, it's going to be tough to really want to do anything else on the NASDAQ. Then over to the S&P, and we see obviously a very similar situation as the indexes tend to do, but we've got a little bit more of a bear channel in play here. And it also fits the potential. If you look here, you've got that original spike to the upside. And it looked like the spike in channel was here. And to be fair, it was. But when it broke and then just continued to grind higher, this whole thing ended up being a gigantic spike in channel, which is right where the market is now. Now, along with that, we do have an attempted wedge that's kind of creating this shelf for a breakout move going down. Honestly, I think a lot of buyers would really love to see it dip down towards those 3650s, the S3, below the channel lows. And although it didn't have an overshot in the highs, and there's nothing necessarily suggesting that should happen, given that we're coming into the open in a few hours, if it hangs out here, sort of grinds its way down, and we're hanging out down here at the open, they could use that volatility to flush down really quick. Where we are now, it'll probably just dip down to the bottom of the channel, but again, it really comes into timing on the S&P. As far as support, resistance, buyers obviously want to buy low and sellers want to sell high. Buyers will look to start initiating in around those 3650s, and as far as resistance goes, 3700 is, that's a pretty obvious brick wall up at the top there. Over on gold, we've got a gigantic spike to the upside in yesterday's afternoon session, where we had that attempt to flush lower. And like we were talking about, it looked like the sellers failed. I wasn't necessarily expecting this, but okay, sure. If we measure the overall movement, right, if we look at the previous swing high, what we've kind of deviated from, actually it'd be easier to start from there, and then draw down to the lowest point that it went. We can use this as a measurement tool to draw up and kind of project where the market might want to go. So if we look at this move to the downside, park it on the low, and then put it right up at the top, we can see that a fairly obvious level of resistance, we're hovering right around it. It's no surprise that we're seeing the market go sideways because this is a major target. We're having a lot of buyers taking profit. You've got, I mean, everything stacking up in the same spot. Now, 1900 is not too far away, so maybe that will play a role and kind of draw price back to it in, you know, over time, not necessarily today, although if they keep putting in moves like this, they'll get there. But realistically, this looks more like a bull spike that they're trying to hold on to, but it's an up tilted spike in channel, which we commonly refer to as an F flag, because that's what they like to do. They like to F you over when you're trying to trade them like a flag. So typically this kind of move down, you'd expect these types of formations to come back to the point of interest where they started. And that's not too far away anymore. It's just sort of ground back towards that 1861. The problem is if it breaks through it, it's a wide open door. There's nothing to hold the market up until it starts dipping back to, you know, maybe 1846. And that's just on a resistance turning support side. There's nothing from a structural support side until like the 1830s. So if it starts breaking down, I don't know that I would want to be holding any bags on this one because the bottom might just fall out just as quick as it ripped higher. And then good old crude, and something that we don't typically see very often on these wider time frames. We've got a very nice looking megaphone setting up. Crude oil is chopping really sideways around the $45 mark. What a shock, right? Who would have thought 45 would have been causing some trouble? It's not like it's ever caused trouble before. Oh, wait. Anyway, so looking at the overall movement that's going on, we've got a megaphone, and realistically, the buyers just failed out of the highs, and then they rotated down into a lower high, right? This lower high right over here. So we've got a higher high attempt that failed into a lower high, and when the market came back to reattempt it, it ended up going above that one by just a little bit, being a trap, and failing back down. And that's very indicative of sellers adding a little bit of pressure. So even though we haven't really hit any objectives, it wouldn't be a surprise at all to see the sellers finish that job and get that flush back down to lows. 45 is obviously going to be a zone of support, but a little bit below 45 as well, 44.73. You can see generally when the market's going to crack 45, it's going to go to that 73 area before it finds support again and then bounces up. And if it fails there, then, well, it's got a tendency to slide to 44. So we'll have to play that one by ear a little bit after that. But for now, we look like we've got a megaphone and the bears are still trying to complete their objective. And, well, I'm kind of planning on either going with them or staying out of their way until they get it. The euro going mostly sideways, but we are seeing a potential higher low shift that's going on with this big giant reversal off of the lows. Really nice candle to start things off. When we're zooming out and we're looking at the bigger picture, this is, you know, it's a really wide channel working its way down. And it could have been drawn up a couple different ways. There is a slightly more aggressive channel, which I believe we had drawn up yesterday, actually. I remember the top of that. And we kind of slid down. But once that blew off the lows and reversed so aggressively higher, a lot of buyers are going to be thinking long. But the problem is they didn't have a chance to get long before it hit the top of the channel. So now they're just trying to find a way in, right? Buy the pullback, buy back at around the early entry point, buy a trap low. Now we've got rising support. We're stacking more things that they can utilize to their advantage. Now, to be fair, we do also have the potential for falling resistance, right? We've got to play both sides and pay attention to what they're doing. So the first breakout is generally going to fail. And if we look at the overall structure of what's going on here, the market is incredibly bullish. So what I would really like to see is the euro attempt to get a move down, run into this major support and get a breakout, and then fail and rip right back up for a huge rally higher again, because, well, that's what the euro's been doing, right? There's a lot of bullish strength on this thing. And then finally, over on Bitcoin for the cryptocurrency side of things, we got a big flush to the downside. Just like we talked about yesterday, that creates a big candle that we can sort of look as a level of support or resistance, which I have highlighted in this kind of orange. It's at the top and bottom of that box. And realistically, we're stuck inside there again. This is kind of what happens and has been happening for a while on Bitcoin, where we've got these big giant blow-offs, and then it just hovers there for like the rest of the day. And if we go backward a little bit more, we can see we've got another big blow-off, And it tried to get above it and then failed and slipped right back through it again. And now we're down here and we're creating another one. If we go backward a little bit further, I mean, they're all over the place on Bitcoin. There's another big rally to the upside. You've got low side support, high side resistance once again. Big bear flush to the downside. It's all support. Tries breaking under it, fails, rotates back up. Big support. So anytime that there's a big flush like this, I'm basically just kind of waiting for these flushes and then looking to play the edges because that seems to be where the majority of traders are coming in. So really nice dip, and you know we still haven't made it all the way back up to those highs yet. It hasn't broken that 20,000, and we're just hovering. There's a lot of accumulation. There's a lot of distribution. There's a lot of just coins flying all over the place. Possibility of a wider channel that we're also dipping down to, or wedge, depending on how you want to draw it up. And so again, there's a lot of levels of support here, and this is very much a range. Buy low, sell high, and the market's starting to get low. This is when things get a little bit more interesting from the long perspective to see if they want to bounce back up. Alrighty, well that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. I hope you have a fantastic day of trading, and we will see you all tomorrow. Thanks.